Hey everybody, if you are a Pennsylvania homeowner, then this video is very important for you, whether you are a regular homeowner or if you're a real estate investor. And it applies to you as well if you're looking to purchase properties because this is one of those pieces of knowledge that having it has saved thousands of dollars. It's helped me to avoid potential financial pitfalls, and it's also allowed me to see opportunities with properties that 99% of investors may not even recognize out there as they're looking at property. So this is a four-part video series, and just to kind of set the framework for how this is going to work. Video number one, I'm going to talk a little bit about why knowing this information is so important. I'm going to kind of give you some real life background on why this is such a valuable asset to have in your tool belt. Again, whether you're a homeowner, a prospective buyer, or an investor, very important. What we're going to talk a little bit about the semantics. We're going to kind of talk a little bit about the terminology that you need to be familiar with, as well as where to locate some of these particular pieces of terminology, and then the how. The how is going to be the nuts and bolts. It's going to be a deep dive right into doing the calculation. As a matter of fact, below video number three, you'll see this fancy little worksheet that I put together, and I want you to be able to use that to help calculate your property tax situation. And just so you know, this is applicable to anywhere in the state of Pennsylvania. I've used this on properties in my own county. I've also used it on properties anywhere, any type of property that we're looking at and evaluating. We're able to utilize this information. So, and I'm going to teach you all of that. Lastly, under the video number three, we're going to go through four examples. I found four examples: two where the property taxes were probably less than what they should be, and two where the property taxes are more than what they should be. And we're just going to kind of do a deep dive on looking at those very quickly. And then last but not least, the what if. What if you think that maybe you're paying too much in property taxes? What does that process look like? And how would a homeowner go about trying to get their property taxes reduced? So that's going to be the layout and the format for this. We're going to go ahead. Let's dive right in to this first section, the why. And why am I doing this? Well, first, just to give you a little bit of background. My background is I am a real estate investor. I'm also a real estate broker. I've been buying houses for over 20 years. My wife and I, we've personally purchased over like 150 properties. We do commercial, residential, home flipping. We also do rentals. So we have some experience on all of that, plus helping our clients buy, sell, and invest in homes as well. So the biggest thing to know is the tax process. If you do go to file an appeal, it's a bit of a lengthy process. We're going to get into it in more detail, but it's important to keep the perspective of this is something for the long term that you're going to want to be considering. If you are going to be living in the house for several years, then maybe it is something that you want to consider. But if it's a flip property, you're buying it, fixing it up, and reselling it, it's going to be very difficult for you to experience the benefit out of this. But it will be beneficial in the sense that you're going to know whether the property taxes on the house that you're looking to buy, are they too high, or is that going to be a problem for you when you go to sell? So that's probably some of the biggest things you need to know underneath that. And then why am I doing this in particular? I don't get any financial benefit for you. If you decide that you want to go and file a tax appeal, great, more power to you. I simply want to provide value to you and be a trusted resource for you. That way, if you have a property or a home that you're looking to sell, buy, or invest, reach out to me. And again, I may not be able to service you in whatever part of Pennsylvania that you're at. I may not be able to be there and service that property personally, but reach out to us. We can definitely locate somebody who financially is able to market that property, invest money and dollars into getting it sold for you. Or if you're a buyer, locate somebody who can represent you well. And if you're investing, we can also try to locate agents to get you set up. But basically, it's really, I want to either be able to save you some money, whether you're paying too much in taxes, and if you are looking to And if you really don't care about that and you just want to give money away, feel free. Send me over some money and we will gladly accept that. But no, like all seriousness, folks, I just want to be able to take this skill that I learned that I use on a weekly basis, and I still see people being confused with it, not knowing how to do this. How they don't even understand. Like they see these assessed values and they're thinking, like, why is my assessed value so low? And you'll realize that the assessed value, we're going to find out here in this next video, it's not necessarily saying that's what they think that your value is. It does once you use this other factor, but again, we're going to get into that here in a second. But so that's kind of why we're doing it, just to provide some value. And again, why is this topic important? Um, as a homeowner, you were able to save money. I mean, we've had crazy inflation the last couple of years. Who would not like to save some money and put it towards maybe a family vacation? And you definitely could. In some of these cases, your property taxes, they might be like $6,000 or $3,000, and you could potentially cut them, 25, 30% off. In the one example problem that we're going to see, you're going to see that their property taxes are actually twice as much as what they probably should be paying. So, um, and it's important to know, just as this can save you money, it's just as important to know that you may be undertaxed. And I say that because it wasn't too long ago that Hemphill Township here in Westmoreland County, there were some hearings going on where I think it was like maybe the school board, they were trying to reassess some properties based off of sales, and the people from the one subdivision where it was being affected by, they were up in arms and saying that if they had known that, they never would have moved the township there, or whatever the case happened to be, or maybe it was Unity Township. I can't remember, but I think it was Hempfield School District actually. And you had cases where the builder was showing up trying to justify everything, and that's a whole different topic for a completely different day. But it's still very important. You need to know whether you're saving money or that you're potentially being undertaxed, because if there ever is some type of a reassessment, it's good to know how much that could potentially impact you and your family's budget. Again, I use this formula that we're going to go through on a weekly basis, and I have seen many properties where the property taxes are just simply astronomical. And I'm going to share a story with you right now. Last year, my wife and I, we sold one commercial property, and we were looking to move those funds into a different commercial property. So we were looking mostly on the East Coast, but we ended up finding one property in Pennsylvania that we ended up not purchasing. But just to kind of give you an idea, based on the assessed value for that county, they were saying that the actual value of the property was around $3 million. And the property taxes themselves, I don't remember the exact figure, but it was about $40,000. So we're talking some significant property taxes. And it was listed at that point in time. It was like $600,000 or $700,000, maybe 750. I can't quite remember. But the property ended up selling for like $500,000. And what this all means, that if you were an investor who was looking to purchase that property and you see that the property taxes are $40,000 on a property that's maybe worth $500,000, it's kind of like it's mind-boggling to realize how much that could impact your cash flow calculations. Like you're sitting there trying to figure out what income you can generate from the property. You have all these expenses, you have mortgage payments, insurance, and then you have this $4,000 per month almost property tax that's coming out of that, and it's just very difficult. It makes it a very difficult sell for the real estate agents. It makes it a difficult purchase for the buyers. It makes it a difficult sell for the sellers themselves, and they're literally paying that. So that's kind of the crazy thing. They were paying astronomical property taxes when they really didn't have to be. If you're an investor, here is really what you need to know. Let's say that you can find a way to save $34,000 on the taxes. That $34,000, and we're just going to use a 10 cap to keep the numbers nice and even. $34,000 saved in expenses at a 10 cap is an increase in value of $340,000. Let that sink in. $34,000 in savings is an increase in value of $340,000. So if you buy that property and you're able to get that reduced, you're technically being able to sell that for a higher amount because you increased essentially the net operating income. Okay, so let's continue to move forward here, and let's talk a little bit about the background of why this is so important. So counties, there's many counties that have not reassessed in a long time, and what we're going to take a look at the common level ratio worksheet here very shortly. But what you'll see is the closer that the CLR figure is to 1.0, we're going to talk about that in more detail here in a second again. That means that it's been more recently that that county has probably conducted a full reassessment, or a reassessment in some particular way. And in a grand scheme of perfect things in the world, as far as values and real estate valuations and assessments, the county's calculated value for what your property is worth should be the same as the actual value, the real market value of it, as well as that should be the same as the appraised value. So you have these three values. You have what an appraiser says your home's worth, what the market says your home is worth, and then what the county says that your home was worth. In a perfect world, all three of those values would be the same. However, that is not the case. It's not the case at all. There's quite a lot of variation. And even if you get to a point where the county's assessed value is the same as the real value, the appraised value could be completely different based upon every single appraiser could come through and appraise things a little bit differently, use different comparable properties, and it just kind of confuses everything. So you're never going to get to that. Uh, that's all I wanted to go over here on the why. It's a very important topic. In the next video, we're going to talk a little bit more about the terminology and where you can gather this information so you can make your own calculation. All right, stay tuned. See you in the next video.